Hello, everyone. This is Dan Gramza, and welcome to DanGramza.com Market Studies for Thursday, October 23rd in the Mr. Russell. What do we see here? We see a market that broke to the downside. What I think is important is how it finished. We'll see this in other indices as we talked about in the advanced video. What do we look for here? I look for an inside day in that market. And when we look at these currencies, they're weaker. If you look at, so the US dollar was stronger, this is the British pound. Look for an inside day in this market. This is the Canadian dollar. It was stronger, which is not what we saw in the other indices. So it's going to be very interesting to see how this plays out. This structure does imply it's at a critical level, and it does imply follow through to the upside. Now, we hear a lot about what's happening with the bond market, but it's a mixture of information in terms of that yield. It's trying to figure out what to do. Be very cautious here. If you're on the long side, this market could easily turn over to the downside. And when we think about copper, a lot of people are looking at copper right now, thinking that the upside is there. It is structurally from a price point of view. I don't think it is from a fundamental point of view. Silver breaks to the downside. Fairly big move in that market. Do we look for continuation to the downside? Actually, I don't. I think the market will go sideways as it catches its breath to figure out what to do. A lot of people are buying the break here in that market. We look at soybeans, it's a mixture out there. How much do we have? Is China now going to start buying our beans? That's what a lot of people think may be happening. Buyers are here, but we don't see consistency in terms of follow through to the upside. So I'm skeptical of the ability to maintain and trend to the upside or to the downside in this market. Well, those are my thoughts for today. Thank you for joining me. Look forward to being with you again tomorrow. And as always, take care.